Hello, everybody, and thank you for joining today's virtual personal finance series. This is brought to you in partnership with the NOLA Public Library's Summer Fun program every Wednesday at 2 p.m. Going all the way to the end of July. If you'd like more information about upcoming webinars, please visit our website, flightcoaching.com/summerfun. And the NOLA Library's website also has information. My name is Alexander Bigby. I am the Executive Director of Flight. We are a local New Orleans-based nonprofit that creates free, high-quality financial education resources for communities and individuals around the city. So today's presentation is on credit. There'll be a 25-minute or 30-minute presentation with a Q&A afterwards. If you have any questions or comments during the presentation, please just type them in the chat box and we will get to them at the end of the presentation. If you're late to join to this, we will be putting a video and PDF of the materials after the session that will be available on our website within about 24 hours. And the PDF will be the presentation from this session. So without further ado, I will introduce today's speaker, Phoebe Brown, who is here to talk to us about credit scores and reports. And let me hand it over to you, Phoebe. Phoebe, how are you doing today?
I'm doing great, Bigby. How are you feeling today and everyone else?
Very well, very well. Excited to hear you talk. This is one of many presentations that Phoebe has done for us.
Wonderful.
Okay.
Welcome everyone, just as Bigby did. Thank you for joining us on this afternoon to talk a little bit about credit. As stated, if you have any questions, you may place them in the chat or we can answer those questions after the presentation. So Bigby will be handling my slideshow. So we're gonna look at this thing called credit management, how to get on track with your personal finances, as well as if you're even a business owner. So how to get on the right track is what we're gonna look at today. Now, credit is something that, of course, working at a credit union, I see a lot of. I'm the Financial Inclusion Officer for Hope Credit Union, and it's something that a lot of individuals have had to learn through trial and error. So I hope that the information that I will be sharing with you today will be helpful to help you to better your life and to manage your credit and to get on the right track. Next slide. So to tell you just a little bit about what we're going to look at, we have to define the word credit. So when we look at credit, there's all kinds of fancy definitions, but really it's the ability to actually have something in your possession, right? That you're giving the ability to pay later. So you're giving services before payment. So for example, if you have like a cell phone and you actually have a plan, well, you're paying two ways. You're being advanced a service that you're gonna pay for, but you're also gonna be billed later for the usage of what you've spent. So with that, you're being given credit. So credit is something that you're going to pay in the future. Next slide. So why do credit reports and scores matter? This is a question I throw out to you for you to really think about it, to contemplate on it. You know, because we hear all these commercials and we know that when we go to buy something, they're going to pull your credit report and they're going to look at your credit scores. But why does this really matter? And why should it matter to you? Well, that's a perfectly good question. So let's look at it. Next slide. So when you define a credit report, you have to understand, now that we've looked at what credit is, what is a credit report and what are the scores? So here I give you a definition about a credit report. A credit report is a consumer report, meaning it's a file with the history of some of your bills and the way you've paid your bills in the past. It is a public record information, and a record of how often you have applied for credit is also in this file. Your credit reports contain information about you. So if you've used credit, or you've applied for credit, or if you currently have anything where you're being extended credit, a credit report will normally house that in this consumer file. Next slide. So why do credit reports and scores matter? And these are some things that you may have not thought about. Credit reports and credit scores matter because some employers will actually pull credit. So to get and keep a job, now you say, well, why should my credit report matter about a job? Well, here's the reason. For example, I work at a credit union. I'm not an MSR, which is a merchant service rep, which most people know as tellers at regular commercial banks. But let's say I was handling a cash drawer, but I'm having difficulty repaying my creditors, and I'm about to lose my car, lose my home. Well, when you're under stress, you're not quite sure what you might do in those times. So who's to say you may not dip your hand in the till? So keep in mind that credit reports and credit scores can stop you from getting that long-awaited job that you've been working hard to get, because they will pull it out, pull your credit and look at your scores, and it can be a weeding out process. Also, get and keep a security clearance for a job, including military positions. I taught financial education to the military for a number of years. And I will tell you, I've had to work with the superior officers, with some of their Army vets or Navy or Marines, etc., regarding their credit. If they have to travel overseas, that can affect their security clearance. Why? Because you could sell trade secrets. Once again, when you're in stress, you have no clue what you would do. So yes, security clearances can be an issue if the credit report and credit scores are not rating you in a well site. Also, getting an apartment. So if you're going to rent an apartment or something like that, your credit reports and scores matter. Because who's to say that you didn't leave a balance at the previous apartment complex you were at? Or you left a trail of balances at the different places where you were renting. So understand the credit reports will matter. Also, insurance coverage. Now, we've all heard of insurance fraud. Well, when you're going through a stressful time in your life, once again, it could cause you to do things that you may have not had any intentions on doing. Like, for example, let's say your car, once again, is going to be repoed. Well, you don't want them to repo it because the car still has value. Well, you may have someone take it, steal it, set it afire, so you can file an insurance claim, totally against the law. So insurance is something that you don't want to commit insurance fraud with. So keep in mind, they can pull your credit, and your credit reports will matter. Also, to get lower deposits on your utilities and any other types of bills that may require it. Back in the day, you used to have to put large deposits down on cell phones if you had credit issues. Same thing can go for utilities. They can pull the credit report, and if you left a utility bill in another state or somewhere, it can stop you from getting utilities here as well. So keep in mind, credit reports are important in that aspect. Also, to open up credit cards. Yes, they will look at your credit. So if your credit is not good when you paying other creditors, a credit card company may not take that risk in allowing you to open up an account. Also, credit reports and credit scores will help you to get better terms on loans. Now, we mean that if you need a loan and you apply for it and your credit is in a good standing, then you'll probably get what we call a positive and low interest rate. If the credit report and scores are showing that there are some flaws and some issues that need to be resolved, the interest rates can be higher on those loans, or even your terms to repay can be higher. So credit reports and credit scores matter, as you see, in a wide range of areas. Next slide. The impact of your credit, as we stated, it impacts you in so many different ways. It impacts your housing, because you may not be able to buy a house. You may only be able to rent, or you may not be able to rent the quality place that you like because of the credit report. So then you have to actually be in a lower means situation. Insurance, we've already talked about, as well as employment, insurance rates, military security clearances, but also professional credentials. So yes, in order to be licensed to do certain things like be a lawyer, CPA, doctor, it could prevent you from getting licensed. Think about it. If you were a doctor and you're actually performing a service, a surgery, and you're about to lose not only your practice, your house, and your car, would your mind really be on doing that surgery? Probably not. And you probably wouldn't want that doctor to be performing that surgery, going through those stressful things. So keep in mind, getting licensed, your license can be held up because of credit. Next slide. But credit, I want you to know, it's not a bad thing. It is a good thing. It's just that sometimes the things we do with credit makes it not so good. So let's be clear. Most of us can't walk into a financial institution and pay $150,000, $200,000 for a house. We have to get financing. So buying an asset such as a house is a good thing. It's a wise use of credit. It's also convenient. You don't have to walk around with large sums of cash on you, so you can use credit at your convenience. It also will help you for emergencies. Your car breaks down. You can't just walk in and buy a new set of tires or get an engine repaired or a transmission worked on. You may have to end up putting it on credit. So it helps you for emergencies to be able to get over that hump. And then you can work on paying for it later, because after all, that is what credit is. Next slide. Also, wise uses of credit is, of course, higher education. Now, I know we all complain about student loans, but how many of us can really go to a college and really pay the full cost of tuition without having to get a loan? Not many of us. So it does help you understand that you can better your situation by getting that degree and getting a job where the money will be more accessible for you to take care of the bill at a later date. Also, it allows you to take those needed vacations that you've always had a desire to go on. I know right now during this time, most people are not traveling, but we will get back to traveling. So how will that look? You may have to use credit to buy your tickets, as well as while you're traveling, you may have to use credit while you're over in whatever state or country that you're in, so you don't have to walk around with cash. So credit can be used wisely. It's just that you have to understand, though there are some wise uses, there are also some unwise uses as well. Next slide. So unwise uses of credit is simply impulse buying. Right now, we're at home, we're on the internet, you're in your emails, and you're probably getting all these sale promotions because employers are trying to get you back to spending money. That's great if you do it wisely. Don't just open an email and say, wow, they have a big sale, I'm gonna buy this today. Because impulse buying can cause you to overspend, and it can cause you to max out your credit. So you want to plan your purchases. Plan what you're going to buy. I always say take that moment to exhale and ask yourself, do I need this now? Can I pay for it now? What is it going to cost me now and later? Also, unwise uses is spending to feel good. Sometimes we fall into bouts of depression, or we're going through things within our personal lives, but we feel that if we buy something, it'll make us feel good. When in reality, you'll feel good for a moment, but then you'll go right back to that same feeling later. So try to avoid spending just to make yourself feel good and look good. Also, spending for status. You get that promotion, or your position requires a certain standard of the way you look, the way you dress, the vehicle you drive. You don't have to do that to spend for status. There's always that old saying about you want to live like the Joneses, but in reality, the Joneses might already be a step from bankruptcy as well. So only spend what you need to spend, but don't spend for status. Also, everyday living expense can be unwise. Now, here's an area where it could be wise and it could be unwise. We talk about carrying cash. You may not want to carry cash. So you may do all your grocery shopping, gas for your automobile, all of your personal expense on a credit card. So here's the unwise part of that. If you do that and don't pay it off when the bill comes, you've now paid more for that tube of toothpaste than you had the desire to. The wise use is that because you don't want to carry cash and you use the credit to be able to purchase your everyday living expenses, but when the bill comes, you do pay it out because you already had the cash anyway, because it was in a bank or a credit union. That makes it wise. So make your choices about using credit very carefully, because it can be not so wise, but it also has some positive effects as well. Next slide. So we've looked at credit and we kind of know what it is now. But what is a credit score? We've heard so many things about credit scores, and you hear so many broadcasts about get your score here or get your score there. But the thing is, what is it and what does it really mean? Next slide. So what a credit score really is, it's really just a statistical number to tell me the likelihood of whether you're going to repay me. That's truly what it is in a nutshell. But here I give you some bullet points. We tell you a credit score is a number that helps a lender predict how likely an individual is going to repay a loan or make payments on time on a credit card or any type of debt. Once again, it's a statistical number to tell the lender or the provider of that credit, are you going to repay me or are you not going to repay me? A credit score is also a number that changes as the elements in the credit report change. So it goes up and down, up and down. If you pulled your credit report today, your credit score is per today. Your credit report is per the past. So the credit score actually calculates on what's in the report at the time you pull it. So you may have paid some things off. That's going to trigger the score to change. You may be behind on some things. That's going to trigger the score to change. Next, a credit score has a broad use and impact. So your credit, as I stated, it is your past. It is your credit, and credit is your future. So even though we know that we may have did something in the past, the credit score can recover from what you did in the past if you resolve it. Also, FICO scores is one of the most common credit scoring systems. So understand that there are over 60 some scoring systems out there. There are some that are more common than others. You've heard probably of a risk score, an advantage score, a beacon score, the FICO score, and you've probably also heard of, as the next bullet point says, the Vantage score. FICO scores is the one that has been around the longest, and those scores vary anywhere between 350 to 850. But the Vantage score, it's the newer scoring model. It was actually developed by the 3 credit bureaus to kind of have a likeness in their scoring. But keep in mind, the scores will always look differently because it's about what's in the report that is actually calculating. Next slide. So here I give you a little pie chart that kind of gives you information about your credit report and your scores. To my left, you will see what makes up a typical credit score, the different scoring systems. So this is based on the FICO score and a housing model. So 850 to 720 is considered excellent. You pretty much have kind of flawless credit right there. Very good is 719 to 680. Good is 670 to 640. Now, when you fall below 640, it doesn't mean that you can't get any credit, but it just means that there's some things you may need to work on. 639 to 600 is what we consider that area to be. Anything below 600, it definitely needs improvement, because that means you're going to probably have to pay higher interest rates, maybe come up with deposits, etc. But when you get to that 549 to 300, that's poor. That means that there are some major challenges that need to be resolved and overcome because of what may have happened in the past. So when we look to my right and we look at the pie chart, this tells you the percentages that go into the score. No calculation system is going to give you their mathematical formula for calculating the score. Understand there are algorithms that will cause the score to go up and down. But in this pie chart tells you the percentages of what each part of that score consists of. So when we go counterclockwise, you will see that amount owed is 30% of your score. The higher your debt is, the more your score can drop. So I always tell individuals, when you look at amount owed, you have to look at ceiling to floor. Floor being 0, ceiling being whatever your limit is. You want to stay as far away from that limit as possible. That's where you will hear people say never go over 30% of your credit limit, because if you do, your utilization is being eaten up, meaning you have more money going toward paying your debt than not. So you want to remain 30% of your balances or lower. If you get too close to the ceiling, meaning you're just about maxed out, there's no more utilization room. So you want to stay as far away from the ceiling as possible. If you're already at the ceiling, then start trying to pay down, because once you can get it from there, you build up utilization room for you to be able to take on more credit. Then you look at 10% is only types of credit. So here is where you have that mixed bag. You might have a mortgage, you may have a car note, you may have some personal loans, you may just have credit cards. All of that is considered types of credit in use, and it's only worth 10% of your score. So it's good to have a mix, but keep in mind, when you walk into that store and they say, hey, open up a credit card and get 15% off, that's not necessarily a good thing. Next, you will see 10% is new credit. When you open credit, it is 10% of your score. Also, this is the area where your inquiries are. So if you're searching for credit and applying for credit, this is where your score takes the hit for those inquiries. Also, remember, you don't want everybody pulling your credit report, so be cautious as to how much credit you're applying for, because all those inquiries or credit applications, it dings your score and it could cause your score to drop. 15% of your score is a length of credit history. How long have you had credit established? Meaning, have you had credit established for 20 years or just 2 years? The longer you've had credit established, the more your rating will be. This is the area where individuals who are interested in buying homes make the big mistake. They pay off all their creditors and then they close them out. And what happens, their length of credit freezes and there's no more history that will be calculated into the score. And that doesn't necessarily look good. In other words, credit is the American way. So it's always good to have credit open, being used, but being paid responsibly and being used responsibly. 35% of your score is your payment history. Payment history is just how you pay your bills. And I told you in the beginning, credit reports show that. So understand, if you pay one account 30 days late, that can drop your credit score by almost 100 points sometimes. So you have to be careful in that area. You want to pay your bills on time so that your credit report and your scores reflect it, because that is the largest piece of the puzzle. Next slide. And here's where I tell you, 35%. Late payments have that greatest negative impact. Recent and frequency are important in this area too. So keep in mind, recent charges and paying them off is positive, but try never to pay late. Next slide. %, outstanding balances. Total balance versus total available credit. So are you extended? You'll hear people say that, hey, I was turned down for this particular loan, or I was turned down for this credit, but I've never been late. It just simply means that you're overextended. So remember that floor to ceiling that I talked about. You want to be as far away from the ceiling as possible. Next slide. Length of credit history. Remember, it's the number of years, not that you have 20 pages of creditors. You want that credit report to have a lengthy history, because that shows that you've been responsible or possibly irresponsible, but it's worth 15% of your score. Next slide. 10% new credit, number of new accounts, multiple requests. The multiple requests are the inquiries. So it's okay to apply for credit, but you don't want to apply for so much at one time. If you're applying for 2, 3, 4 creditors, the credit report is going to show that, and it's going to also show when you applied, and the inquiries are going to stay there for 2 years. So once it dings that score, showing an excess amount of you applying for credit, that will be harmful to you. So we're not saying don't open credit, but just do it wisely when you do. Next slide. And types of credit, it's just going to be those multiple items. So you have credit cards, which are revolving, and you have installments, which are loans. So keep in mind that those are the 2 major types of things that appear on your credit report. When other things appear, like medical bills or utility bills, that normally means that they're now in collections. So you don't want collection accounts to hit the report, because it doesn't fall under this. It will then fall under that payment history, which can then drop your score by 200 to 250 points if a collection item hits your report. Next slide. So here are the 3 national credit reporting agencies. You have Equifax, Experian, and TransUnion. Those are the major players in this particular credit reporting industry. So we know about the breach. We know about how some of them have had some challenges, but needless to say, they're still the major 3 in the game, and they're the ones that house our consumer reports. Next slide. So how do you get a free credit report? There's a number of ways you can, but the government put in place the annual credit report, which is the FACT Act, the Federal Credit Transaction Act. You may get a credit report from this act free of charge once a year. Once a year by either going online to that website, annualcreditreport.com, or by phone by calling that 1-877 number, or by downloading the actual application and completing it and mailing it into Annual Credit Report. So if you pull the credit report today, let's say from Experian through Annual Credit Report, you can't do it again till this time next year. So that's how the Annual Credit Report works. Do you have to look at all three at one time? No, you can do one now, 3, 4, 5, 6 months later, do another one, 3, 4, 5, 6 months later, do the next one. That way you're looking at your credit report throughout the year, making sure your identity hasn't been compromised and that your creditors are actually reporting you correctly. Next slide. This gives you a picture of how that actually looks, their website. When you go here, you just request your credit report. Now, it may ask you to set up an account for you to be able to go back in and review the report. I would say be somewhere where you can print the report out, because the report is only going to be good for 30 days, 30 to 60 days. After that, the report will no longer be good. So if you don't set up the account for it to be held in, you will not be able to go back in and review the report. So be sure that you're somewhere where you can print out the credit report for your review. Next slide. So getting your credit reports and scores. So here I just recap that Annual Credit Report is the free one. Now you can go to Equifax, Experian, and TransUnion and request your reports there, but unfortunately you may have to pay a cost for it if you're not unemployed and actively searching for work. The credit score, however, you will always have to pay for. Even if you go to Annual Credit Report, you may have to pay for the score. You will have to pay for the score online with a credit card. By mail and phone, you will not be able to. But really the main thing is, if you have not looked at your credit report, take a look at it. The score really does not matter as much. Now, you can also, when you go to log in, you have to understand that there are going to be some security questions that's going to be asked. You have to be able to answer those questions. So that's why it's important for me to explain to you that it is against the law for you to go and pull someone else's credit report without their consent. Those security questions are going to be things that only you as an individual will know. They may say, okay, you've had a mortgage with Chase or with Blue Ridge Mortgage, or you never had a mortgage. Only you will know the answer to that. So you would answer the questions per what you believe is correct. And so long as the credit report confirms that those answers meet the credit report, that the file, then you'll be able to get the report. If it says that something was not answered correctly, then you will have to mail off for the report. So keep that in mind. And those questions are there for your protection. So be sure you do this in a safe and secure location to avoid trying to do it really at public computers, because your information could be compromised. Next slide. And here I just give you some information as to how long is information kept on a credit report, because it's important to understand that things don't just stay there 7 years. There's a way to say it. Things stay on your credit report 7 years from the last activity date, or if it's something in open and in good standing, it's indefinitely. You will also see that closed accounts, they will stay on there closed for about 10 years. Later missed payments will stay 7 years from the last activity date. So that delinquent history of paying late, it will report and be there for 7 years, along with collection accounts that are unpaid. Then you have your civil judgments, which is lawsuits. It could actually be there 7 years or longer. Chapter 7 bankruptcy, when you have discharged, meaning you've completed the bankruptcy, it will stay on your credit report 10 years from the date of discharge. If it is dismissed, then it will stay 7 because the creditors can now go ahead with their collection practices. A Chapter 13 bankruptcy is what I call reconstruction bankruptcy. You're trying to get yourself back on your feet. So the trustees of the court will tell you how much you will need to pay to the courts, and it will stay on your credit report for 7 years. Why 7 years and not 10? Because it's going to take you almost maybe anywhere from 4 to 5 years to pay back what the creditor is asking you to pay. Unpaid tax liens can be 10 years, paid tax liens 7, and credit inquiries 2. Keep in mind, legal actions can carry longer because when they're filed in the courts, they take on a whole different life. Next slide. So how to improve your score? Do not close unused credit cards, because you want them to, if you've had them for a long period of time, you want them to be able to help to impact your score. But also, if you don't use them, you will lose them because the creditor can close you. So if it's a card that you know you possibly want to keep, go ahead, use it, pay it out. So that way you have utilization on the card. You don't have to do that on a monthly basis, but do it periodically throughout the year, because that will help you to build up usage so the creditor won't close you. Don't open new credit cards either unless you really need to, because having just an abundance of credit cards, it doesn't help improve your credit life. It just shows that you have extended amount of credit balances that you can use, and sometimes it can overextend you. So be mindful of that. Next slide. So improving your credit score is simple. Can't stress it enough. Pay your bills on time. Once you do that, you're on the great road to having a great credit score. Get current and stay current on whatever your debts are. Right now, in this time, individuals are struggling. So I can't stress, contact your creditors, talk with them, let them know what you can and can't do and see what they have to offer, because that will help you to stay out of trouble and help delinquencies not to build up. Don't open a lot of new credit rapidly, because that will affect your credit score as well as closing them rapidly. Correct any mistakes on your report. Now, how do you do that? Any credit report that you receive, you have the right to dispute anything that is reporting incorrectly. The credit report that you pull will normally give you either a credit research form or provide you with information on how to correct errors. Keep in mind, the credit reporting agencies only report what creditors send to them. So once the dispute is sent back to the credit reporting agencies, they send it to the creditor. The creditor has a certain period of time to respond to that dispute. If they notice that you're correct and they're wrong, they will correct the error on the report. You will receive a revised credit report showing that that trade line has been corrected. If they notice they're correct and you're wrong, the credit reporting agency will then send you a letter stating you will need to contact the creditor, because the creditor's findings is this is a justifiable debt. If the creditor does not respond between that 45 to 60-day period, then the trade line can be removed from the credit report. The only problem with that is it can come back. So you have to be very careful of errors that get corrected for that purpose. So also shop for loan rates with the focus of a certain time period. You don't want to go out and apply for loans all at one time. There is something called rate shopping for mortgages and vehicles within a 14-day period. All of that will appear on the report, but it only go against your score is one hit. But keep in mind, weekends are included. So be careful when you are shopping for loans and looking for the best rate. Talk it out before you have companies pull your credit report. If you like what they're saying, then give them the okay. Keep your balances low on your revolving accounts. We know when you take out a loan, you're already at the ceiling, but credit cards, you have the ability to control not running your debt up to the ceiling. Pay off debt. It's okay to pay off debt. When you pay it off, especially credit cards, it doesn't mean you have to close the account. You can pay it off, it'll stay open, and you use it periodically. And be sure to check your credit report. It is important that you know what is being reported about you, because that's the only way you can actually get on the right track. Next slide. I hope the information that I've provided to you today has been helpful. The information, my contact information, was just on the slide that Big B had. Right now, because I am working remotely, it is always best to reach out to me by email. So if you reach out to me by email at phoebe.brown@hopecu.org, I can gladly answer any of the questions that you have. Or if you're interested in receiving more information about Hope Credit Union, you can also reach out to me as well. Or you can visit our website at hopecu.org. So I hope this information has been very helpful to you and that you can use it and help get on the right track. And if there are any questions at this time, I can gladly take those. But at this point, I'll turn it back over to Bigby.
Thank you very much for another fantastic presentation, Phoebe. I don't see any questions on the chat box so far. Does anyone have any follow-up questions? Phoebe, let's see. I got a thank you from Wen. Well, thank you very much for joining us, Wen. As I said earlier, this whole presentation will be available on our website within 24 hours, along with Phoebe's presentation. Yeah, if you're interested in learning more about this, either contact Phoebe directly. Please also have a look at our page and our website, where we have a lot of different resources where you can learn more about financial education in your area. I guess if there's no questions, I will let Ms. Brown go and say thank you again. Looking forward to, we've got plenty more in the pipeline together, so looking forward to those.
Yes, well, thank you once again. And we definitely look forward to the other presentations.
Yeah. Thanks everyone for joining today, and take care.
Thank you, everyone.
Thank you.